Hello, good morning and good afternoon. How are you doing, Gehrman?
Yeah, I'm very good. Lots going on in the markets. So another interesting discussion is going to be today, I guess. What about
Yes.
you?
No, doing great. It's quite a warm day here in Amsterdam, but happy to have the summer weather. I'll dive right into it since we do have a lot on the agenda today. Oh, excuse me, today. I'm going to start by showing a new feature that the Vesper platform has launched. Then we will dive into our discussion. Gehrman and I will cover today logistics disruptions, energy market developments, the weather, palm oil balance, and more. So let me kick things off. Some of you might already be aware of this, but Vesper recently launched a new feature, which is our home screen. So this is when you log into Vesper moving forward, you'll see this home feed. And what this will do is give you a quick update on what has changed over the last week. So a quick update on what prices have moved, your forward prices, market analysis reports that have been published this last week, and then any news. Obviously, I cover quite a few markets, not just oil. So you'll see some of my news and analysis isn't necessarily focused just on the oil markets. But the other thing we are really excited about is our connect the dots. So from your home feed, you can click on this little page icon. And what this does is give you a highlight of what is happening. So for instance, here in crude palm oil, what is driving the current market? What are the bull and the bear factors? How has this price moved over the last week? You're able here then to toggle over to the forecast to see our outlook and then understand here quarter by quarter what is driving that forecast. So this is a summary of our machine learning forecast, news articles, as well as Gehrman's analysis. So that is especially for buyers that are looking to cover volumes over the next few quarters, gives you a good idea of what's impacting the market and what risks there might be. So very excited for this. If you currently subscribe to Vesper and have any questions on that, please feel free to reach out to your account manager and they're happy to share more. But diving into our discussion today, let's start with the big topic of logistics disruptions. So in addition to the ongoing shipping disruptions through the Strait of Hormuz and the Bab al-Mandab Strait, we now have the Black Sea disruptions, as well as some lower river levels throughout Europe. Gehrman, I'm curious to understand what developments you've seen there and what has the impact been on the vegetable oils market?
Yeah, thanks, Gabriela. It's the big topic indeed at the moment, and very you can say a wild card almost. So let's start with the Black Sea here, which is the most important export in region for sunflower oil, wheat and corn, but also quite important for the rapeseed exports, for example, from Ukraine to Europe. As ships and ports in Ukraine and Russia come under attacks, we see the nearby sunflower oil price holding strong. I'm going to share my screen and quickly show FOB's exports price, for example. So as you can see, it's holding relatively strong compared to the rival oils such as soybean oil, palm, and rapeseed. So yeah, damages to grain terminals and attacks on the ships are making ship owners reluctant to call at the ports. Large trading groups are halting operations, and at the moment there are no diplomatic solutions discussed. It's very important to understand that deep sea exports of sunflower oil, rapeseed, and wheat from these two countries are at the minimums at the moment because of this. And there have been some discussions about the redirection, but I think it could be very difficult taking into account the volumes and how much ships can carry and how much trucks can carry. But what's saving prices from further increases now, as you can see, prices are not really skyrocketing for sunflower oil, is the fact that we are now at the end of the season for sunflower oil, when exports are typically lower. However, if the situation continues like this into September and October, there will be very serious concerns for the market participants, because everyone was eagerly waiting for the big sunflower crop this year in the Black Sea, and which and harvesting normally takes place in September, October. So if by that time the problem is not solved, then there will be serious shortages in the market. So that's why everybody is now watching the situation, and there are, let's say, no good solutions, at least to me, on the table at the moment.
Yeah, really, really tough situation. Exports from the two largest sunflower oil exporting countries are paralyzed with no clear timeline on resolution. Really going to be something to keep an eye on, and potentially a big issue as we near the harvest. Can you tell us about the low river levels in Europe?
Yeah, indeed. So in parallel, so at the same time now, lower river levels on the Rhine and Danube are disrupting barge shipping, so river shipping within Europe, and people already face increased, some people say double, for example, I heard from one market participant, barge shipping costs. So, for example, Rhine is very important for the transportation of rapeseed across Germany, but also the river obviously goes to the Dutch ports or to the Dutch coast, while Danube is very important for Hungary and Romania. Those countries obviously also produce grains and rapeseed. So yeah, the logistics costs are increasing, but there were also some concerns that lower river levels can affect irrigation, so they can basically impact crops, for example, in Romania, and reduce yields potentially for sunflower, for example, right? Which now is a very important growth stage.
Mm-hmm. Yeah, and staying on the logistics and geopolitics topic, let's switch over to the Middle East. Do you have an update on what the situation over there is looking at like?
Of course. So let me go to the futures price section. Let me choose Brent. Okay. So yeah, this is the closing price for yesterday. Yeah, yesterday, as you can see, Brent fell below $84 per barrel after the US President Donald Trump called off a planned military strike on Iran and said that fresh negotiations would begin. And there were reports that regional allies, including Saudi Arabia, US allies, urged the US to pursue diplomacy here, prompting the president to suspend the attacks. While efforts continue to secure a deal to reopen the Strait of Hormuz. These lower Brent levels affected most of the veg oils except for sunflower oil, as we saw in the beginning of the conversation. So yeah, for example, soybean oil, palm oil, they declined because of the lower Brent. However, because of the large mistrust between Iran and US, markets are very cautious about, being too positive, right? And it's still too early, right? It's just, again, another announcement of negotiations, but nothing specific yet. Meanwhile, the actual transportation of energy and could be also applicable to fertilizers, but I'm not too sure. So the traffic through Strait of Hormuz and the Bab al-Mandab remain low based on the shipping data companies. So that's basically one of the important fundamental factors to, let's say, for people not to be too positive at the moment. So that's the most recent development. That's what we have. So the market now will watch if the negotiations do start again, if they progress well, if there is a a peace agreement, but it seems to me like that it could be not a long way, but definitely a not short way to it.
Yeah, a little bit of a silver lining with what we're seeing in these logistics disruptions, but I think you nailed it. Does feel like we've been here before.
Yeah, exactly.
Switching over to weather, do you have some recent developments on what we're seeing with the El Nino developments and weather here in the EU?
Of course. So yeah, if we start with the EU, based on the news, the heat is moving eastward. Drying up the irrigation canals, as we, for example, discussed Romania, supplied by Danube, and in that case, we mentioned, for example, rapeseed, but there are concerns also for the corn in Romania. And farmers warn that insufficient water levels could reduce the yields and the quality as well, and delay the shipments. There were also some, I think, cuts made by the Mars agency in Europe for the yields for the European grains and oilseeds. And why I'm mentioning grain here specifically, it's important not to ignore it, because a relatively recent rally in rapeseed and soybean prices were largely caused by the spike in wheat and corn prices, right? Because of the weather, because of the Black Sea, right? So in this context of big weather and logistical disruptions, it also makes sense to take into account what's going on with corn and wheat, which we normally do not discuss during the within the Joel's context. And about El Nino, sorry, you also
no worries.
So for El Nino, it's basically it's pretty much the same. It's expected to be the strongest from September, October till December, January. And I think MPOB published a fresh thought that fresh fruit bunch production could decline next in late 2027 by from 10 to 14%, something like this. So they're already trying to make some calculations by how much palm oil production can be impacted. El Nino is basically no major update. So it's basically remains as a significant bullish factor.
Okay. It does look like palm oil will have enough supporting factors in 2027 too. So switching to talk more on palm oil, do you have an update on what we're seeing for our near-term direction, especially looking at the July balance for Malaysia?
Yeah, of course. I think some of the numbers were shared this morning that large agencies estimated increase in supply, basically in Malaysia for July. So production increasing by 7 to 8% and stocks increasing by 2.5 to 3%. So that was expected because this is a seasonally higher supply period. So that's what kind at the moment. I'm gonna show the prices now for palm oil. So let's choose prices not in dollars but in Malaysian ringgits. So as these news about the S&D, they have not been let's say allowing prices to go up significantly, but also there are enough of supporting factors for palm oil, such as strong Indian demand anticipated by the market, El Nino news, preparation for the B50 sales in Indonesia. So these factors, of course, provide a very strong support. And if we put, for example, here 6 months, you can see that prices have been pretty much range bound, right? Not going too up or too down significantly as the market is getting prepared for the active B50 sales in October, basically. And another thing, of course, worth mentioning for palm oil is that markets will watch for any administrative disruptions in Indonesia, as DCI, so the governmental agency that will get involved into price setting for exports. It will start it will get involved into the export activities starting in September. So that's a bit of an unknown thing for the market. Basically it's unclear how it will play out with the administrative delays in Indonesia. But yeah, we're only gonna figure out in September, October.
Yeah, I'm sure that will keep us with lots to chat about in coming weeks. Very interesting. Let's look at the Lauric complex and what you're seeing there.
Of course. So let me maybe share. Let's start with coconut oil and I'll share the price. So I'm going to go to Lauric oils. Let me get coconut oil, see for Rotterdam, for example. So this is the October-November price for crude coconut oil. So yeah, coconut oil has been reacting to soft oils and palm oils direction, but also largely to the developments in the copra markets, which is essentially your coconut. Let me go to it. So here we've got plenty of prices. Maybe I will need to select less prices next time. Could they be noisy? But I think people can get an idea that, prices, you can say somewhat reached the bottom in the mid of June, then rebounded and then decreased again lately. But the opinion has been going around that prices for copra, so the raw material for coconut oil production, should not go below this level, right, touched in June. Of course, it's just an opinion, but the arguments for that were that the cost levels, the upcoming typhoon season in the Philippines, and potential increase in the local B5 to the B5 mandate for biofuel, but also the fact that coconut oil is now even cheaper than palm kernel oil, which is not very usual, because usually you've got palm kernel oil shows a discount compared to coconut oil, but in this case coconut oil is cheaper. So this basically leads to the opinion that prices should not go below those, but also because the production of copra recovered this year and the supply should be okay-ish. Prices also might not go too high, but it's always difficult to say in copra because there are no specific figures, monthly figures. You've got just yearly figures. But we basically stick to the same opinion that price will go sideways to up, especially if biofuel mandates are increased, which will mean higher consumption. But we also tend to believe that the bottom could have been found here somewhere for copra and coconut oil prices.
At the very least, it does look like the chances of prices going lower are fairly slim. What about palm kernel oil?
Okay, let me go to... Okay, for example, for Indonesian price, I think this one will do. So yes, similar trend as coconut oil, so increasing until end of July and then decreasing lately. Palm kernel oil, as I've been saying many times, it closely follows crude palm oil, and because of the weaker crude palm oil this week, palm kernel oil declined as well. If we, for example, now recall the estimates for crude palm oil production, which, for example, Reuters said that crude palm oil production in July in Malaysia could have been grown by 7%, for example. So similar rates normally applies to crude palm kernel oil, right? So what I mean here that in July, palm kernel oil production probably improved as well. So, and stocks were good in at the end of June. So it looks like, in July there could have been a good supply for palm kernel oil as well, but we are going to figure out on the 10th of August, I think, when the numbers will be published.
Yeah, something to look forward to at our next webinar. Looking over at the soybean oil market, what are we seeing over there?
Of course. So let me then share the price levels as well. So if we talk about Chicago soybean oil, I'm just going to go to the futures. Soybean oil crude. CBOT. All right. Yeah, as you can see, as we discussed at the very beginning, falling Brent prices drove down soybean oil price. So that was the key reason for the low price. The second driver was lower soybean price, which went down because of the improving US weather. So for the previous, I think, week or two, it was very hot and dry in the US corn belt, which was worrisome for soybean, but also for corn. And recent news that the much needed rain has come and will be there for some time, caused the decrease in soybean price and also contributed to the decrease in the soybean oil price. However, it will be interesting to see what will be happening in September, because Trump will be meeting with the president of China, Xi Jinping, I think in the US, if I'm not mistaken. And I think, it will be a big event for the grain markets. What we've seen recently, I think China increased the purchasing of soybeans from the US, which was one of the supporting factors. We're going to see if this trend will stay up until the meeting, which will take, I think, place on the 24th of September, something like this. Still a couple of months away. But there are various serious theories at the moment, because some sources say that China is a bit annoyed by the US tariffs policy and might step away from purchasing soybeans. But in reality, what we've seen this week and last week, the purchasing of soybeans from the US by China has been active. So that's going to be one of the key indicators in the coming couple of months. And it's a bit unclear what will be the direction there, but we'll have to watch it.
Yeah, absolutely. As someone who is originally from the Corn Belt in the Midwest, the much needed good weather has been good to see, but something to certainly keep an eye on. Last but not least, let's take a look at the rapeseed oil market.
Of course. So let me go to the rapeseed oil section. All right. So we've got here, for example, two interesting prices. We've got refined rapeseed oil for Hamburg, and we've got here rapeseed oil crude for Dutch mill. So similar directions, but as you can see, the September-October position for rapeseed oil has been a bit more flattish. But basically, if you look at this one, which is a bit more sharp, as we said before, lower Brent and soybean oil prices pressured rapeseed oil price levels. But fundamentally, of course, the hostilities in the Black Sea keep everyone nervous, because Ukraine now is actively harvesting rapeseed. I think it's been over 50% harvested now. And the harvest is going to be, I think, a little bit better than in the previous year. But the volumes cannot be shipped, cannot be exported by the ships because of the hostilities. So I think local sources have been saying that it goes into the crush locally. So local rapeseed oil producers, increase rapeseed purchasing to produce more rapeseed oil. But either way, it means a bit higher expenses for Europe. Ukraine started the policy of, not the policy, Ukraine took the direction already last year to produce more rapeseed oil and export it rather than just exporting rapeseed. And that's, yeah, obviously sounds like a more expensive thing for Europe, which prefers to buy rapeseed from Europe rather than oil. And this year, the logistics issues force basically the market to crush even more potentially and export the oil. But all in all, yeah, that's a difficult situation fundamentally for the market. In the EU, if we talk about the EU, the European Commission, I think, kept the rapeseed forecast same as the previous month. So I think around 19.7 million metric tons. So a little bit below the previous year. But remember, we discussed the river levels at the very beginning. So especially for Germany, but also, yeah, Romania, Hungary, it makes the transportation of rapeseed is more, is more expensive. And now the harvesting is ongoing. So that's another layer of costs, right? So the Black Sea disruptions add costs, the lower river levels add costs, which again, yeah, fundamentally in my view is supportive for the prices. But at the moment, Brent has outweighed those factors. And then finally, Canadian crop. Yeah, we heard that it's been looking good, and the weather has improved in key growing areas. But for Europe, which also imports not just from Ukraine but also from Canada and Australia, important thing will be that Canada might also crush more rapeseed, canola, into oil rather than exporting canola because of the large biofuel demand from the US. So that could be, let's say, another channel that's getting tighter for Europe, right? So that's why this season we tend to think that prices for rapeseed oil in Europe could have quite some supporting factors and stay strong, yeah, because of the and largely because of these potentially lower exports from key European partners such as Ukraine and Canada.
Great. Well, certainly a lot to keep an eye on this harvest season here in the EU, as well as heading into it in North America. So we will keep an eye on things. We will see you all back here in 2 weeks, hoping for some logistics resolutions, but we'll certainly keep you updated there. Take care, everyone, and thank you for your time.
Thank you, everyone. See everyone in 2 weeks.